Welcome to Debating Net Zero, where we navigate the complex journey towards a sustainable future. Our goal? To challenge conventional thinking and inspire action and thought leadership among executives and strategists around the world. So get ready for an engaging and enlightening conversation hosted by Fold & Company's Mike Ratcliffe and Ralph Mamedov. This is Debating Net Zero, where the future of our planet is in the balance and the strategies of today's businesses are on the line. Welcome to Debating Net Zero. I'm your host, Elaine Pratt. Today, we're tackling a crucial topic at the heart of the energy transition: incumbents versus disruptors. As the push toward net zero gains momentum, traditional energy giants and innovative newcomers are competing to shape the future energy landscape. The question is, how will these dynamics influence the path to sustainability, and who will take the lead? To debate this topic, I'm joined by Fold energy experts Ralph Mamedov and Mike Ratcliffe. Ralph, Mike, thanks for being here.
Thank you.
Great to be here.
Great. So let's start with the recent BP campaign slogan, "and not or," which suggests that the future of energy involves both conventional and renewable sources. What does this slogan mean to you, and how do you see it reflecting the current strategies of major energy companies?
Well, I see the slogan as being quite telling. It reflects BP's efforts to position itself as a leader in both conventional and renewable energy sectors. They want to convey the message that these two industries are not mutually exclusive and that they can lead in both areas simultaneously. Companies like BP and other majors are investing billions in new energy technologies. They may not be as aggressive as some other companies like Iberdrola, but they're making significant contributions in areas like biofuels, hydrogen, offshore wind. These efforts are crucial, especially given their financial and technological capacity.
I think Ralph makes a valid point, but I'm a little bit more skeptical. While BP and others indeed are investing in renewables, I don't see that they're fully committed to the new business model. The big oil companies are still deeply entrenched in fossil fuels, and their investments in renewables seems more like a hedge rather than a wholehearted transition today. The problem is that their traditional models don't easily translate into the renewable sector, which is creating significant challenges for them. They're still investing heavily in traditional hydrocarbon businesses, and I don't see that they're switching their investments to focus really on the green market and really to go make it a go.
So that brings us to the issue of profitability. Ralph, how do you see the balance between investment and returns in the renewable energy sector for these major players?
Well, it's a very complex equation. The returns in renewables aren't as high as in conventional oil and gas, where it's measured in double digits. But you have to understand, these companies are playing the long game. They're investing in technologies like hydrogen and biofuels, where they see potential for long-term growth. Moreover, they are leveraging their existing infrastructure, which gives them a unique advantage that other companies don't have. Of course, it's true that the returns haven't met initial expectations, but these are also early days. The key for these companies is to continue to remain consistent, to continue innovating and adapting their business models.
I'm not too sure that adaptation is really possible for them. The issue is that these companies are really built on the wrong economic model. It's the old economic model, one where they control the entire value chain from production to retail. In renewables, at the moment, you can't replicate that. For instance, in solar and wind, they don't have the same control over the supply chain, which makes it much harder for them to go and generate the same level of returns. And if they want to be a serious player in the new green energy market, they need a different business model. You take pure plays like Tesla or Vestas, they're focused on dominating one key component of the value chain. Tesla and grid-level batteries, and Vestas and wind turbine towers. if the majors don't commit more seriously to really try to dominate one sector rather than thinking about it in the old way, they could find themselves locked out. And we've seen incumbents swept out of markets by disruptors too many times in the past. So this is not a new picture.
Well, so let's talk a bit more about the specifics of these challenges. Ralph, you mentioned that companies using their existing infrastructure for biofuels and hydrogen production. Can you elaborate on how this approach is working and whether it gives them a competitive edge?
Well, yes, of course, their economic model may be to their disadvantage, but being vertically integrated company enables them to control or to manage a very complex supply chain, and they're leveraging this advantage in the renewable space. For instance, they're using their existing refineries to produce biofuels, and then they're using their existing infrastructure for distribution and retail. It's a significant advantage because it lowers the barriers to entry. It's especially important because it reduces the initial capital expenditure. In other industries like hydrogen, these companies have been producing hydrogen for 40, 50 years, of course, from fossil fuels, but they have the technology and they can leverage it to become a significant player in this space. So the returns might not be as high as oil and gas, but they're positioned to scale up quickly when the market demand increases.
Mike, what do you think about the scalability of these renewable efforts? Can the traditional energy companies compete with the pure play renewable companies in terms of scaling up?
Well, I agree with Ralph in terms of when the renewable market actually looks very similar to the traditional hydrocarbon market. But otherwise, I got real doubts. BP tried to enter the solar market a few years ago, and they were just unable organizationally to manage the rapid pace of what we saw about cost reductions and innovation, and they had to pull out. It's just had the wrong business model. So they can play in areas that are similar to their traditional markets, as Ralph says, like hydrogen, biofuels, and also LNG, which is actually very interestingly gaining traction as a bridge energy solution in markets like deep sea shipping and heavy trucking in China. But I don't see them actually setting themselves up to go and play in the true new renewables market like electricity. That's, with the cost of solar and wind continuing to decline and with battery technologies improving in leaps and bounds, I see this as really a very vital and dynamic market. And, it's unlikely that they're going to be able to have a dominant technology in these in the future. And these are the areas of the future market where oil and gas simply are not investing in new business models. And I see that, to be honest, as a real issue.
So speaking of changing approaches, do you think that recent geopolitical events such as the wars in Ukraine and Gaza are influencing the strategies of these energy companies? Are they doubling down on traditional energy, or are they accelerating their renewables investments?
Well, geopolitics, of course, will always have an impact, especially in the conventional fuels. But also, we're seeing that in renewable space as well. The war in Ukraine has already shown its impact in smaller scale in Europe and in larger scale as well. Gaza may create problems if there's an escalation between Iran and Israel. Of course, that may have impact on oil and gas supplies. But these events also underscore the need for a diversified energy portfolio, which includes renewables. I think for these companies, it's a very tight rope to walk. They still have to balance between conventional production, oil and gas production, and the renewables. They have to maintain their traditional energy operations, but they also have to increase their renewable investments. I think key here is to find the right balance and to watch the markets attentively and to move in whenever there's a demand.
The key point I think about these geopolitical events like Ukraine and Gaza, they're absolutely typical disruptions that happen overnight. And to be honest, the majors have been great in terms of handling those in the past. You can take a look past a number of major disruptions, especially around in the Middle East, and they've been great in terms of changing their whole global supply pattern. Take Ukraine. It radically changed the energy market in Europe, and it was amazingly impressive how Europe, thanks to the majors, managed to switch from Russian gas delivered in pipelines to alternative supplies delivered by sea. Much to the dismay of Russia. So you really got to go and give the traditional oil companies a lot of credit in terms of their ability to go and switch. But the point is that this is also a major incentive for Europe to go green, using domestic sources like offshore wind around the North Sea and Irish Seas, or solar around the Mediterranean. And it's those additional impacts of this disruption that they're not so good at actually reacting to, because they're different. They're very good in terms of the traditional markets, but when they move into new areas, then they have issues. So these events underscore the need for companies involved in the new energy markets to have a number of different scenarios and to go and have flexibility. Most oil companies have the scenarios, but they don't have the flexibility of moving into new energy markets. They're very good at handling traditional ones.
So let's pivot to a topic that's often overlooked, the impact of new players in the energy market. What role do you think companies like Tesla, which started outside the traditional energy sector, will play in shaping the future of energy?
Well, I see that Tesla is really a game changer. Tesla and other new entrants are putting pressure on the traditional energy companies to innovate and adapt. And Tesla's approach to energy storage in particular is something that the big oil companies just haven't capitalized on yet, and in some instances haven't really understood. Although I think it's becoming pretty clear now when you see the growth of these grid-level batteries. Batteries are becoming a critical part of the energy equation, and Tesla's way up ahead on the curve in the roof solar market, as well as battery systems for consumers and industries and the grid. It has sophisticated software to go and link these battery systems together to create what are called virtual power plants. And it's got AI-driven trading software to allow customers who bought these systems to maximize the potential revenue from selling to allow them to go and sell excess power and make money out of it. Musk has said that at some time Tesla Energy could be even bigger than Tesla Auto. And only recently, as the market's been seeing Tesla's energy profits increasing like crazy, people are at last listening.
I agree that Tesla has brought a fresh perspective to the energy market, especially with their focus on battery technologies, virtual power plants, electric vehicles. Unlike the traditional energy companies, Tesla has built its entire business model around renewable energy, which of course gives them a significant advantage. In this stage, the traditional companies can learn a lot from Tesla's approach, particularly in terms of innovation and customer engagement. But it's important to remember that it's still early stages, and Tesla is still primarily a car company. And while they're making inroads into energy, the scale here is completely different. The challenge for traditional energy companies is to integrate some of Tesla's innovative practices by leveraging their own strength.
So before we wrap up, I'd like to get your thoughts on the long-term outlook. What do you think the energy landscape will look like in the next 10 or 20 years? And will we see a smooth transition to renewables, or will there be significant disruption?
I think next 10 to 20 years will be really important. Most probably we will see a mixed energy landscape where both renewables and traditional energy playing important roles. Of course, policies are really important here. The renewable sector is mainly policy-inducive industries. But I believe with more regulation coming and more cost reductions, more technology improvement, the balance will eventually shift towards the renewables. We may also see along the way some significant disruption, whether it's due to geopolitical events or for some other developments. Could be because of the technological breakthroughs in areas like battery storage or hydrogen. All these factors can hinder or accelerate the transition, and which will eventually make traditional energy companies inevitable to adapt more quickly than they currently anticipate. The companies that can successfully navigate this transition will be ones that thrive in the new energy economy.
I agree. I think the next couple of decades are going to be crucial. I see a slightly different scenario. As I said, I see that electricity is probably the key, and it's going to become the clean energy solution. Not with just the cost of making green electricity, but also storing it is reducing like crazy. The amount of R&D in these areas, plus the recent improvements, virtually guarantees lower and lower costs, which is going to make electricity really competitive, like the competitive green energy. And I think this is when this happens, we're going to have a tipping point, and the market's going to suddenly turn and go to the electricity side. We even layer on other factors like self-driving technology, which is being pioneered by the EV market. Tesla shows some amazing data, which I recently realized that they've got. It's cutting down accidents by a factor of 10. Just think, that's amazing. Think about the potential cost to society in terms of savings.
Yeah.
When people realize this, electricity and EVs are going to go mainstream, and that's going to radically change the marketplace. Batteries are going to become mainstream, and they're going to go into other areas of transportation, and that's going to mean the market could potentially switch away from ICE technology to EVs really fast. If that were to happen, that would be amazing disruption and a significant change.
Well, thanks, guys. This has been a great discussion, and appreciate your time. I appreciate the perspectives that you shared today. It's clear that the energy transition is a complex journey with both opportunities and challenges on the horizon. As we've discussed, the interplay between established energy giants and emerging disruptors will be pivotal in shaping our future. So we'll continue to watch closely as this landscape evolves. And thanks again to Ralph and Mike for your valuable insights. And thank you to our listeners for joining us on Debating Net Zero. Until next time, stay informed and stay engaged.